Hello everyone, our topic for today is about opportunities and future outlook for the IMF. I am your reporter for today, Edgar Armontalia, BSBA Marketing 3. The 2008 global economic crisis is one of the toughest situations that the IMF has had to contend with since the Great Depression. For the most of the first decade of the 21st century, global trade and finance fueled a global expansion that enables many countries to repay any money they had borrowed from the IMF and other official creditors. These countries also use surpluses in trade to accumulate foreign exchange reserves. Trade surplus can create employment and economic growth, but may lead to higher prices and interest rate within an economy. The global economic crisis that began the 2007 collapse of mortgage lending in the United States and spread around the world in 2008 was preceded by large imbalances in global capital flows. Global capital flows fluctuated between 2 and 6% of world GDP between 1980 and 1995. But since then they have risen to 15% of GDP. The most rapid increase has been experienced by advanced economies, but emerging markets and developing countries have also become more financially integrated. The international community recognized that the IMF's financial resources were as important as ever and were likely to be stretched thin before the crisis was over. With a broad support from the creditor countries, the IMF's lending capacity tripled around $750 billion. To use those funds effectively, the IMF overhauled its lending policies. It created a flexible credit lines for countries with strong economic fundamentals and a track record of successful policy implementation. Other reforms targeted low-income countries. This factor enabled the IMF to disburse very large sums quickly. The disbursements were based on the needs of borrowing countries and were not tightly constrained by quotas as in the past. The IMF has played a role in helping countries avert widespread financial disaster. The IMF's requirements are not always popular but are usually effective, which has led to its expanding influence. The IMF has sought to correct some of the criticism according to a foreign policy in focus essay designed to stimulate dialogue on the IMF. The fund's strengths and opportunities include the following. The IMF's new toolkit, new opportunities, all challenges, foreign policy in focus. September 17, 2009, access June 28, 2010. First is the flexibility and speed. In March 2009, the IMF created the Flexible Credit Line, FCL, which is a fast disbursing loan facility with low conditionality aimed at reassuring investors by injecting liquidity. Traditionally, IMF loans program required the imposition of austerity measures such as raising interest rates that can reduce foreign investment. In the case of the FCL countries, quality for it not on the basis of their promises but on the basis of the history. Just as individual borrowers with good credit histories are eligible for loans at lower interest rate than their risky counterparts. Similarly, countries with sound macroeconomic fundamentals are eligible for drawings under the FCL. A similar program has been proposed for low-income countries, known as the Rapid Credit Facility. It is front-loaded, allowing for a single upfront payout as with the FCL, and it's also intended to have a low conditionally. Next is the cheerleading. The fund is positioning itself to be less of an adversary and more of a cheerleader to member countries. For some countries that need loans, more for reassurance than reform. These changes to the fund toolkit are welcome. This enable more domestic political income stability. Conditionally intended to stabilize a country's balance of payment. Again, this program is aimed at a low-income countries with strong fundamentals and short-term balance of payment needs. Next is the adaptability. Instead of providing the same medicine to all countries, regardless of their particular problems, the new loan facilities are intended to aid reform-minded governments by providing a short-term resources to reassure investors. In this manner, they help politicians in developing countries manage the downside cost of integration. For some countries that need loans more for reassurance than reform, these changes to the fund toolkit as welcome instead of providing the same medicine to all countries regardless of particular problem. These new loan facilities are intended to aid reform-minded government by providing short-term resources to reassure investors. Next is the transparency. The IMF has made effort to improve its own transparency and continues to encourage its member countries to do so. Supporters note that this creates a barrier to any one of more countries that have more geopolitical influence in the organization. In reality, the major economies continue to exert influence on policy and implementation. In transparency, the fund encourages countries to be more transparent. This is another area where it can benefit from adopting its own advice. Open and transparent eligibility requirements will benefit the fund in the long run by posing a barrier to geopolitical influence. The Financial Times reported that Zhu Xiaoshuan, the Chinese central bank's governor, said the goal would be to create a reserve currency that is disconnected from the individual nations and is able to remain stable in the long run, thus removing the inherent deficiencies caused by using credit-based nation currencies. Thank you.